Hello, my name is Dennis Bamford, founder of Odin Capital Group. Today we're going to go over our philosophy. For 30 years, I believed hard work was enough. My W 2 job was to drive a semi truck. And I did what I was taught as a young man. I thought that was the right thing to do. That was to drive more miles and work harder, longer hours. I'd eventually have a comfortable retirement. And I thought the daily grind was the only path to, security. Then 2008 hit. I realized hard work doesn't always mean financial security. I watched years of hard work disappear almost overnight. It wasn't because I didn't try, it was because I believed in a system that wasn't built for people like me. I wasn't taught any different. That wake up call sent me on a new path, learning from mentors who had weathered multiple downturns. I stopped asking, how do I make more? And started asking, how do I protect what I already earned? My mentors taught me a simple truth. Real wealth isn't built by chasing the highest returns, it's built by protecting principal first, focusing on cash flow, and thinking in decades, not months. This became the bedrock of Odin Capital's philosophy. Our philosophy. Lasting growth is supported by a deep, unwavering foundation. We focus obsessively on the roots of an investment so our partners can benefit from our philosophy. The four pillars of our foundation are capital preservation, conservative underwriting, disciplined risk management, and substantial reserves, which gets us our outcome: the predictable passive income, long term wealth preservation, and significant tax advantages. Our investment principles, the rules we never break: no negative leverage. We do not acquire assets where the cost of debt is higher than the property's unleveraged return. This ensures the property's cash flow is not eroded by excessive borrowing cost. A minimum DSCR of 1.35. Every property must be able to cover its own debt service by at least 35% at the time of underwriting. This builds a strong margin of safety to weather market downturns and ensures stability. A fixed interest rate. Um, we mitigate interest rate risk with fixed rate loans or defined rate cap strategy, protecting against the unpredictable and rising interest rates to secure long term value. We also try and find properties where we can get seller financing with fixed interest rate. We don't do hockey stick projections. We underwrite with a realistic market supported rent growth, not speculative future performance, relying on present market data rather than the optimistic, unsubstantiated forecast. Substantial day one reserves. Um, on every deal is capitalized with the 6 to 9 months of fixed cost in reserves, providing immediate liquidity to handle unforeseen expenses and protect the investor's capital, which is our primary goal. Our main focus is to protect your capital and our capital. Our underwriting process, we stress test for reality, not hope. We protect capital before we chase yield. Every potential acquisition is modeled against multiple market downturn scenarios. If it doesn't work under pressure, we don't do it. Our exit cap sensitivity. Our base case cap is modeled at 50 to 100 basis points higher than the entry rate, assuming a less favorable selling environment. Rent and occupancy shock. We model scenarios with 0% rent growth and a 10 to 15% drop in occupancy to ensure that the property remains stable. We also include in this the modeling of no appreciation on these properties either. When we get the P&Ls, we dig into the profit and loss reports and find where we can get savings and or unrelated costs that are being used to inflate the NOI, which is done a lot when we look at these properties. The NOIs are getting inflated, and that gives an inflated price, and that we don't buy that way. Not buying at the top of the market. Our focus, boring, steady cash flowing assets. We aren't chasing trends. We invest in recession resilient commercial assets that provide essential services and produce predictable income from day one. Our asset classes are multifamily, medical offices, small bay, retail, and light industrial. Our market box or our buy box or area, populations of more than 150,000, annual job growth more than 1.5%, and it has a manageable supply pipeline, landlord friendly laws. We definitely look in those states where they have the landlord friendly laws. The rest of this buy box, yes, we do that, but if we find something in a smaller market, we will go after it if it makes sense. We combined a founder's mission with decades of experience. As a new sponsor, we know trust is earned. I know trust needs to be earned, not given. It is built on three pillars: our partners, our advisors, and our governance. Our partners, our property management partners, have executed this exact business plan across thousands of units in our target submarkets. Their operational expertise is our execution engine. Our advisors and mentors, our advisory board represents over 75 years of collective experience, billions in transactions, and has successively navigated more than three full market cycles. Our governance: no one person makes a decision. Every acquisition must be a unanimous approved by our investment committee, and whose members bring independent oversight and deep market research. Our commitment: radical transparency. Clear, consistent, and honest communication is non-negotiable. If any number slips, you will hear from us first with a plan, not an excuse. During the raise, we'll have weekly investor emails answering questions and spotlighting key deal metrics. Post first 90 days, bi-weekly updates on key milestones or innovations, progress, and any surprises, and then ongoing. Um, you'll be still getting the bi-weekly updates ongoing, but plus we'll throw in a monthly KPI reports with financial snapshots and quarterly video updates with leadership. And those video updates will probably be more than quarterly. Our bad news policy: we communicate any bad news within 48 to 72 hours. This communication will always outline the objective facts, our action plans, and the next investor checkpoints. And as an investor with us, you don't have checkpoints. This is an open door where anytime you have access to us. Uh, Key advantages: the tax efficiency of commercial real estate beyond cash flow and appreciation. Direct ownership in commercial real estate offers powerful tax benefits that can significantly enhance after tax returns and accelerate wealth building. Depreciation and cost segregations: deduct a portion of the property's value each year and creating a paper loss that can shelter cash flow from taxes. A 1031 exchange: deferred capital gains and depreciate recapture taxes by rolling 100% of your proceeds into a subsequent investment. Passive income treatment: rental income is not subject to self employment tax, making it a more efficient income stream than active earnings. Also, if you are or if you have a self-directed IRA, we would love for you to get in contact with us and become one of our key members and investors. That's a great financial tool to use. Is that self-directed IRA? Who we partner with: we are not for everyone. We build for seasoned investors who understand the real wealth is a long game. The partners who thrive with us tend to value consistent cash flow and capital preservation over speculative returns, prefer disciplined operators and clear communication over flashy projects or projections, think in years and market cycles, not quarters, and seek to compound wealth safely through conservative income producing real assets. Sorry. The next step, a strategic conversation. Our goal is to build long term partnerships with investors who share our philosophy. We believe the first step is a simple conversation to determine if our approach aligns with your financial goals. This will not be a sales pitch or an offer to sell securities. It is an invitation to explore a potential fit. I hope to hear from you. Thank you for your time and have a good day.